Hi everyone, thank you for checking out my first YouTube video. My name is Graham Witt and I'm a local realtor with Keller Williams Atlanta Partners here in the North Atlanta metro area. I wanted to share some information that I bet you're probably curious about and, until recently, no one had really asked me about. Quite frankly, I think it's a pretty good question. With interest rates and home prices increasing, should we buy foreclosures? Well, in a healthy market like we're in here in the Atlanta metro area, at least at the time of making this video, I find it hard to recommend going that route. While we may hear the sky is falling on the national news, that is simply just not the case here. The national real estate market is nowhere near equivalent to the Atlanta metro real estate market. Atlanta had not caught up to the other major U.S. cities in terms of home prices until we saw the boom that started in 2020. That boom was due to historically low interest rates and other economic and workforce factors that are just unique to the Atlanta area. In this graph from the FMLS, we can see that the average home price has continued to increase despite the media claiming the sky's falling. The thriving market in Atlanta is at least partly due to the decreased supply as seen on this FMLS report and the desirability of the area. Without going too deep into supply and demand, when supply is low and the demand is high, prices increase. The Atlanta area is seeing this now. We have low supply, high demand, and thus increased home prices. Experts in the real estate, lending, and economics areas pretty much all agree that there will not be a bubble like we saw in 2008 or 2009. The industry is significantly more regulated, and banks and lending institutions cannot legally go down the same path that led us to the housing market crash. Prices will always fluctuate because it's normal, and outside of a catastrophic event, we don't really see a crash coming. I've heard people say, but banks want to recover what they're owed. They want to get rid of the home. We can buy homes for pennies on the dollar. Well, this is only partly true, and unfortunately, it's not the pennies on the dollar part. Yes, they do want to recover what they're owed, but since the market is healthy, they want to recover more than what is owed. Why? Well, because banks, like sellers and investors, are in the business of making as much money as possible. Homes during the 2008 crash just sold for less because the market was flooded with homes. Supply far outweighed demand, and the purchasing power of people was diminished. People now have significantly more equity in their homes and are able to pay higher prices. Simply put, homes will not sell for pennies on the dollar because buyers can, and they are, paying significantly more than pennies on the dollar for homes. This means banks can demand more money. And to be competitive when buying a foreclosure home, cash is king. Unless you have liquid cash, you're really going to be facing an uphill battle. Do you plan on going up against all cash buyers at the foreclosure auctions when you need a loan to purchase that property? Definitely won't be easy. The foreclosure homes that are worth buying will be bought in cash, and in this market, cash trumps a loan. I've not met many buyers, especially people who need or are really looking for homes at a discount, that have available liquid cash to go up against professional home investors. I'm not saying it's impossible, but it's just going to be difficult, and there's a pretty low success rate across the board. If you have the cash and want to win, you can definitely win. You just need to know that you're buying the home as is. And as is means the property owner is selling the home in its current condition and is unwilling to make repairs or improvements or even really negotiate any credits to fund repairs. As you can guess, the term as is rarely, if ever, applied to a home that is in immaculate and move-in ready condition. So let's talk more about condition. When condition comes to a foreclosure, the home is usually owned by the bank, and the bank will have little to no idea what condition the home is in or of any defects, and they just know they need to sell it. The bank will most likely not provide a property disclosure or perform an inspection or alert you of any defects. Like an investor-owned property, the owner has never lived in the home and will not have any knowledge of its condition. The unknown conditions, coupled with purchasing the home with pure cash, it can be pretty risky unless you have the ability to make substantial repairs or take a substantial loss. This is because when buying with cash, there are no minimum property requirements that are put in place to help protect the buyer, which is you. So when you use an FHA, USDA, VA, or conventional loan, you'll have those protections. The minimum property requirements vary depending on the type of loan. Some of the requirements include structurally sound foundation, clean drinking water, a roof that prevents moisture from entering the home, functioning heating and air, and so much more, things we take for granted. If there's a defect that is found after the home is purchased, there is generally no recourse for you, the buyer. You will be responsible for the repairs. If possible, you should always get an inspection. And I would always recommend getting an inspection when buying any home, foreclosure or not. And that inspector should be of your choice. Never let anyone tell you who's going to inspect your home. And as you can imagine, the last thing on a person's mind when they're losing their home is that they need to maintain or pour more money into the home. Money they didn't have to keep the home in the first place. This is a home where they're about to lose. Many homes that are going into foreclosure suffer from neglect and disrepair, as well as intentional damage. We have seen cement poured into toilets, copper wiring stripped, piping taken out, and that's just to name a few. There's no telling what the person did or didn't do to the home, in the months leading up to the home being foreclosed upon. On top of that, the bank will not turn on the utilities for you to verify all the home systems are working. And you can definitely bet the home is going to be requiring repairs to make it ready to sell or rent for top dollar. And by the time it's rentable or ready for resale, it'll probably have cost you the same as buying a home that's not in foreclosure. A final thought and question to ask yourself is, why would I want to invest in a home that has so many unknowns when I could buy a home that has been well maintained? Here is a real document from the FMLS of a home listed for sale that is in foreclosure in comparison to 2 homes that have sold and one that is currently marked as on hold that are all in the same neighborhood and not in foreclosure. Notice anything about the prices? Well, the foreclosure home is only 7% below the sold price of the non-foreclosure homes and the exact same price as the home that is listed as on hold and not in foreclosure. To get a solid investment and minimize risk, we really look at getting our investors fixer-uppers that are around 20 to 30% below the comparables in the neighborhood because it allows for both renovations and profit if they plan on reselling the home. While you may believe that foreclosures are a good way to get a deal on a home, that's just not always necessarily the case in a healthy real estate market. Atlanta is still a desirable market and has low supply and high demand, and that has just led to continued increases in home prices, which includes increased prices for foreclosures. For this reason, homes will not sell for pennies on the dollars because banks can just recover more than what is remaining on the mortgage. Cash is king when buying foreclosure homes, and buyers should be prepared to purchase the home as is, with little knowledge of the home's condition or defects, and that can lead to costly surprises. These are all factors that one needs to take into consideration when looking at purchasing a foreclosure home versus the typical resale home. For all the reasons above, I would recommend looking at either resale or off-market homes if you're looking for the best deal. You can even find some amazing deals on new construction homes because the builders are trying to close as many units as possible. I hope you found this video useful. If so, please like and subscribe. If you are looking at listing, buying, or investing and would like a free consultation regarding your specific real estate needs, please send me a message or give me a call. I would love to help you achieve your real estate goals and build your net worth. Have a great rest of your day, and I hope to hear from you soon.